Give us the details then in terms of your current assessment of the state of the energy complex in Europe. How much of a challenge remains then?
Yeah, good morning, also from my side. Thanks for having me. Well, we have shown strong numbers in the first half year, and I would just say this is driven by the fact that we see indeed a little bit of less headwinds from the market and more tailwind when it comes to the energy transition. Now, the likelihood of a repetition of the crisis of last winter has gone down significantly, which also can be seen in the futures in the forward markets. But we have to be clear that the structural change due to the Russian war against Ukraine and the drop out of Russian gas for supply of Europe is going to stay, and therefore the crisis is not over, and we have to do our part to make sure that we stabilize the situation as much as we can in Europe.
Good morning. Does that mean the government should still be supporting consumers with their energy bills?
I think you can't say that in general terms. That depends really on the markets. The share of wallet of energy is very different in different markets. For example, Eastern Europe versus Germany versus the UK. And therefore, I would say the answer depends where you are. There are certain markets where this is still necessary. There are markets where this is not the case. For example, in Germany, the price breaks, which have been on, will be kept over the next winter, but only as a precautionary measure. It's probably not really going to be needed anymore, but this assessment might be different in other markets, maybe like the UK or some other Eastern European markets especially.
And presumably that assessment, of course, is going to be tied to the pricing of energy. What are you modelling as you look towards the end of the year in terms of energy prices, gas prices in particular, Leonhard?
Yeah, first, we are not modeling when it comes to the very short-term horizon. There we're just looking at forward markets, because obviously we don't have better models than the forward markets. And now, in the long-term outlook, we are modeling a structural increase of prices because the cheap Russian pipeline gas is gone. It's going to be replaced by LNG gas, and that is structurally higher than in the past. I think this is what we're modeling. In terms of this year, we are looking at the forward markets, and we can see forward markets significantly down versus Q4 last year, but significantly up versus the pre-COVID, the last pre-COVID year, 2019. So there we have roughly a doubling to tripling of prices on the gas side. And that is a fact that is not going to go away anymore, I'm afraid, not in the short term.